Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me today. Have you heard about the cold plunges or the ice baths that are all the rage? There's a guy on YouTube, a doctor, a neurophysicist or something, that he's a Huberman, I think is his name. He talks about all the benefits of cold baths or cold showers, and it's all the rage now because it increases your metabolism, burns the bad fat off, and keeps the good, what they call brown fat, which is really high in mitochondria, and it helps the mitochondria, and it's supposed to be really good for you. Sometimes it's not the most comfortable thing, but I'm trying to take these cold showers every morning now. But today, the reason I'm talking about this is because we're going to jump in the deep end of some real icy water here. So what I want you to do is put on your floaters, grab your noodle, jump right in. The water's chilly. And that came across bad. I'm sorry. I didn't. Your water noodle. You know what I mean? I'm sorry. All right, let's jump into this because we're going to talk about different financial planning uses for reverse mortgages. And you may say, "Hey, Bruce, I don't have any money in investments. This isn't going to help me." Well, it may. You just pay attention, okay? Well, number one, it may help out your rich sister that lives down in Arizona or something. You could let her know and say, "Hey, you need to talk to this guy. Talk to your financial advisor about this." Because these ideas, they're not my ideas. I'm swiping them from other people, and I'll give them credit too. But they're really good financial planning ideas. And you hear sometimes people say, "Well, I don't need a reverse mortgage. I've got plenty of money," or whatever. And you say, well, no, you don't necessarily need it, but you can benefit from it. And your financial situation can be improved by it. Even if you've got $500,000 or $1 million in investments, you can benefit from this. And I'm going to explain a few uses on how you can do that. Before you do that, though, it really, really is beneficial if you do not have a mortgage on your home, if you own it very free and clear or have a very, very small balance on your home. We talked in the past about the dangers, and I mean that. I mean the danger of carrying a traditional forward mortgage with a required payment into retirement. That's a dangerous proposition. If you have a full-blown mortgage and you just refinanced it in 2020 or 2021 and you put it on a 15 or a 30-year term, you're going to be paying on that mortgage probably the rest of your life, or very close to it if you did a 15-year term, which means you're making higher payments now, okay? And I highly recommend give me a call because you need to get that mortgage paid off. And just think about how good your financial picture will look if you're saving $1,000, $1,200, $1,500 a month in principal and interest payments that you do not have to shell out every month for a mortgage payment. Because if something happens and let's say you don't have much money but in savings or reserves, but you've got this $1,500 mortgage payment of which, say, $1,100 is going to principal and interest, and now your furnace goes out. You need to get $10,000 to get a new furnace. Well, now you're adding a monthly payment because you don't have that cash. If you had a reverse mortgage and you got rid of that $1,000 a month payment, now in 10 months, you could either pay that loan off or you might have saved that money. And now you've got $10,000 in the bank that you could put towards that furnace or whatever the situation is, your car, whatever. With a house, things are always going wrong. So please call me. My name is Bruce Simmons. You're listening to Reverse Mortgage Radio. You can reach me directly at 303-467-7821. 303-467-7821. That's my direct line. I am the reverse mortgage manager for American Liberty Mortgage Incorporated. And I've been here now 12 and a half years, going on 12, close to 12 and a half years. I've been with this company. I've been doing reverse mortgages for 21 years, since January of '03. I've been doing reverse mortgages. And that's the only loan that I do. I don't mess with any other loans. If you need a conventional mortgage or a HELOC or a VA loan, I cannot help you. I know people who can, so please call me because I could refer you to somebody that's good, but I can help you with a reverse mortgage. The challenge these days, unfortunately, is getting you enough money to pay off your existing mortgage. If you took out a refinance in 2020 and you cashed out an extra $15,000 to pay off bills, and now your house is worth $500, but you owe $400 on it, unfortunately, I'm not going to be able to help you unless you bring money to the closing, because reverse mortgages right now, we're only able to loan probably between 34% of the value on up to about 65%. You got to be close to 95 years old to get 65% of the value. The older you are, the more money you can receive. The younger you are, the less money you can receive as a percentage of the value of your home. Also, the higher the interest rate, the less money we can loan. The lower the interest rate, the more money we can loan on the FHA reverse mortgage loans. That's what I'm talking to you today about. The FHA insured reverse mortgage, which is called the Home Equity Conversion Mortgage. That's a HECM is what we say. Sounds like you're clearing your throat, but the HECM is a very, very flexible and financial planning tool. And that's the thing people don't understand. So many people think that reverse mortgages are for desperate people. I don't need this because I'm not desperate. Well, guess what? 99% of my customers are not desperate, but they're benefiting from the reverse mortgage. You can benefit from something without being desperate for it, okay? Keep that in mind, because this is not your grandma's reverse mortgage. It just isn't. And there's a lot of very good uses for it, and we're going to dig into those today. But my number is 303-467-7821. 303-467-7821. If you have any questions, give me a call. You can also visit me online at reversemortgageradio.net. reversemortgageradio.net. That's my website. Go there. You can download the podcast for this show. Next week, it'll be up. You can go back and scroll through all my different radio shows for the last 6 years. I think I've been doing this now, 6 years plus, 6.5 years, something like that. But all the different radio shows are on my website. So please visit there. You can download my consumer guide, which goes through a lot of details about how reverse mortgages work, the negative amortization, and all that. Today, what I want to do is start out the show by giving you a quick overview of how reverse mortgages work. Basically, in a nutshell, a reverse mortgage is an FHA insured loan that's specifically designed for people that are 62 and over. It allows you to convert a portion of the value of your home, like I said, somewhere between, say, 33 to 60, 65% of the value you can convert into cash. Now, we have to pay off any existing loans first. Sometimes I'll have listeners call me and say, you said on the radio that I could get this line of credit that works that is so great. And they are wonderful. The line of credit is a fantastic plan. But you have to pay off your existing mortgage first. So in other words, let's say you've got a mortgage of $200,000 and we can only loan you $200,000. Well, in that case, you're not going to have any money left over for a line of credit because we have to use all the money from the reverse mortgage to pay off your existing loan on your home. You say, well, what's the benefit of that? It's called no mortgage payment. That's what the benefit is. So if your principal and interest on that $200,000 loan is $1,200 a month, you're saving $1,200 a month. You just gave yourself a $1,200 a month raise, tax-free, because this is loan proceeds. It's not taxable as income. Now, the home's still yours. It's still your home, so you have to continue to pay your own property taxes and homeowner's insurance. You have to live there as your primary residence. You have to maintain the home and keep your name on title. As long as you do those things, you can never, ever, ever be required to make a payment. However, I'm going to show you in one technique one of the great benefits of making a big payment. say take money out from another investment, apply it towards a reverse mortgage, and you'll see. Stick around. That's called a tease in the radio business. All right, let's go. I'm going to start out with simply, if you have an existing mortgage on your home, call me, see if we can loan you enough to pay it off. That's the big thing. If just imagine how nice it would be not to have that $1,000 or $1,200 principal and interest payment that you have to pay every month. How would that improve your life? Having an extra $1,000, even an extra $500 a month. If the principal and interest payment that you're paying on your mortgage now is only $500, that's a huge, huge benefit to you. If you think of your Social Security is $1,500, well, you just gave yourself a 25% raise there, if my math is right. Well, more than that, it's a 30% raise. Anyways, that's number one. Pay off your existing mortgage. However, number two, let's say you do have a lot of money. You've got some money in an IRA or a retirement account, a 401k. And it's taxable. You put money into this 401k all these years, and then you rolled it over into an IRA when you retired. You're in your early 60s now, and you're thinking, man, I still got a long ways for that money to grow. But as you pull that money out, you're going to be taxed on it, and you're going to have a required minimum distribution when you're 72 years old on whatever money's in there. So that's not the best either if you don't need the money. But what if you're able to convert it to convert that traditional IRA into a Roth IRA? A Roth IRA allows the money to grow tax-free, and you can pull the money out without paying taxes on it as well. Now, I'm not a financial advisor, so please, please, please talk to your financial advisor, your CPA, your accountant, whoever. If you need a good financial advisor or CPA, please call me. I know a few that are very, very good. But anyways, these are great plans. This is a great way to improve your overall wealth down the road, is to convert that Roth. However, if you've got a fair amount of money in there, that could be a big bill. For example, I'm using this example from a magazine article. It's in Advisor magazine for financial advisors. It was written by a reverse mortgage guy named Harlan Acola. And I'm using his scenario. The philosophy's been around forever. But he says, let's say John is a 65-year-old retiree with $500,000 in a traditional pre-tax IRA. He's looking to switch to a Roth, to convert it to a Roth. If he converted that $500,000 into a Roth IRA, he'd have to pay $175,000 in income tax to convert it. Okay, so John uses $175,000 from his line of credit to pay the income tax. He doesn't have to make any voluntary payments towards his reverse mortgage loan balance. Okay, so that loan balance is just going to grow over time. He took out $175,000 on his reverse mortgage, and he applied it to pay the taxes. So let's say his loan balance over 20 years grows from $175,000, the loan balance on the reverse mortgage, to about $465,000 is what he owes on the reverse mortgage. However, that money, that $500,000, that has grown to $2 million now, and he doesn't have to pay any taxes, but you do have to subtract the amount of money he took out from the reverse mortgage. So if you subtract the $465,000 from that, he would net out roughly about $1.5 million or $1.53 million, say. Now, if he did not do a Roth conversion and his investments grew to $2 million at 7% over 20 years, and he pulls it all out, he'd have to pay $800,000 in taxes. So he'd end up with about $1.2 million in money, okay? If he did go for the Roth conversion, but he used that $175,000 from other investments from his account to pay the taxes on it, and it grew to at 7%, he would end up with $1.25 million over that time period. So you could see if he used the reverse mortgage to pay the taxes, he ends up with about $250,000 more money over time, because he ends up with $1.5 million compared to either 1.2 or 1.25 million over 20 years. Now, obviously, These are rough assumptions, saying he's not going to use any of that money over the next 20 years, and you're looking at a standard 7% growth over the 20-year term, all that stuff. But the bottom line is the philosophy of it works because he's not having to come up with that $175,000 out of pocket to pay that tax bill to convert the Roth. All right, let's switch gears here and talk about long-term care. Let's look at some statistics here first, if I could even say the word. Right now, or roughly around 2020, there were 78 million baby boomers, million American baby boomers, okay? Every day, 10,000 baby boomers turn 65 years old in America. There's somewhere, I've heard reports of $12 to $18 million in home equity, which is nearly half of their total assets that people own, okay? So, but then you look at the long-term care and what people are going to need as we age, because we're all aging, right? 70% of people are going to need some form of long-term care. Now, this is from statistics from the American Association for Long-Term Care Insurance. Maybe they're a little biased, I don't know, because they're trying to sell something, but I think that these are, from what I've heard, these are pretty standard. 35% of people will need some kind of nursing home care, which is a higher level, meaning that there's more cost associated with it. The big challenge is that 70% of people falsely believe that their health insurance will pay for long-term care. It does not. Your health insurance or Medicare does not pay for long-term care. And only about 7.5 million Americans have some form of long-term care insurance. That's about 10% of the people of baby boomers. So keep that in mind. That's a huge, huge disparity of people. The average age for somebody to be admitted to a nursing home is 79. 40% of individuals who reach age 65 will enter a nursing home during their lifetimes. Think of it, all the people who have diabetes, it's an epidemic, heart disease, cancer, all these different things that could require us to be in a nursing home. The average stay in nursing homes is 892 days or 2.44 years. That's a lot of money. That could be a ton of money. And I didn't print up the nursing home statistics, the cost. I know that it's expensive. We all know that it's expensive. Most people do not have some form of insurance. What if you were to use certain loan proceeds to either pay for insurance? Now, unfortunately, a lot of people that I work with right now, we're using reverse mortgage proceeds to pay for the actual care in their home because they didn't plan. If you're in your early 60s and you're thinking, well, I need some kind of long-term care insurance, that would be really beneficial, and you're in good health overall, you haven't had a heart attack or cancer or diabetes, it may not be as expensive as you think. Now, there's all kinds of different plans. There's standard long-term care insurance. There's life insurance with long-term care riders, which is really good. And those, for example, in life insurance plan with a long-term care rider, it might be $15,000 a year. Maybe it has a $500,000 or $600,000 long-term care benefit, okay, which is a constant benefit, and then it might also include some death benefit as well if you don't use it all. So you got to look at what would that cost, that $15,000 a year. What if you took that money from a reverse mortgage, and that would be covering, so it's not extra money out of your pocket, but it covers you for, say, $600,000 in care down the road. Now, these numbers, I'm pulling from different statistics here, and you have to really talk with a professional in long-term care. I'm not licensed to sell long-term care. I've been through a class on it, and I'm certified. I'm a certified long-term care person, but I don't sell it. Okay, I know a little bit about it is all. Just enough to be dangerous, unfortunately. But the other way to do it is, you can also set money aside right now. Let's say you don't have any mortgage on your home and you want to set up a line of credit so that you have extra money down the road. Well, let's say you've got a $700,000 home and you can get a reverse mortgage at 62, and let's say it would be roughly, given the rates currently, you could get in the range of $185,000 or so, roughly. Okay. And let's say that line of credit grows over time. That line of credit might grow to be, in 20 years, it could be $600,000, $700,000 in 20 years or more. And so based on the interest rates, because the line of credit has a built-in growth rate to it that's equal to 0.5% greater than the rate you're charged on the loan. If you have any questions about this, please just call me. We can talk more specific numbers about your specific situation. My number is 303-467-7821. 303-467-7821. My name is Bruce Simmons, and I'm the reverse mortgage specialist with American Liberty Mortgage here in Denver. I'm actually the reverse mortgage manager there, and I've been specializing in reverse mortgages for over 20 years. It's the only loan I do. So I'm talking about long-term care insurance, but I'm not the professional at it, okay? You'll need to talk with somebody that actually sells this on a regular basis and understands how they work and understands the different policies and can weigh the pros and cons of it with you. It may not be right for you. I don't know. I'm not trying to sell anything other than try to educate you about the different ways a reverse mortgage can benefit you more than what the cost is for the reverse mortgage. So you set up this growing line of credit today when you're 62 and you don't use it for 20 years. Now, instead of having $185,000, you have $650,000 20 years from now. Now you need that in-home care, or if you have to go to assisted living or nursing home, you'd have to pull all the money out at one time if you're going to use it for long-term care, because you have to live in the home. You can't use reverse mortgage proceeds to pay for nursing home care or someplace where you have to leave the home permanently. You can pay for in-home care. The other way, like I said before, I highlighted real quick, is getting that single premium. Let's say you took $100,000 single premium life insurance or long-term care insurance. Well, and it would have a long-term care rider with it. So let's say it's got a $100,000 death benefit. Excuse me, 150 is what the scenario that I was on a webinar and I just saw this from somebody. So you take $100,000, you're in excellent health now at 62. You buy this insurance premium for $100,000, and that's the only premium you have to pay. The care benefit might be $450,000 over your lifetime. But if you never use it, you still have $150,000 in death benefit. That could be very, very beneficial to you, okay, in the long term, and your estate, I should say, too. So keep that in mind. Now, I want to touch on another way to use a reverse mortgage. Let's say you're using a reverse mortgage. You call me, you say, hey, I've got $175,000 balance on my mortgage. I can loan you $175,000. So you use all the money to pay off your existing mortgage, so you're saving that $1,000 or $1,200 a month in principal and interest payment. But there's no money left over for a line of credit. Well, you're in pretty good shape financially, so you have $500,000 in an IRA. You keep that money for a while now, let's say 5, 6, 7, 8 years, whatever, and let's say your loan balance on the reverse mortgage grows from $175,000 to $235,000. So it's $60,000 more. And now you need to pull $60,000 out of your IRA. You're like, oh man, I'm going to end up paying big time taxes on it because it's not a Roth IRA. I didn't have the money to convert it into a Roth. I didn't want to spend that extra money. But you take that $60,000 out. Well, actually, if you didn't do what I'm telling you, you'd have to take out like $71,000 if you're only at 15% tax rate. Okay. But so you'd have to take $71,000 out to get $60,000 because you're going to end up paying about $11,000 in taxes on that. Another alternative, though, is take out $60,000 and you apply it to your reverse mortgage. So now your loan balance would drop from $235,000 back down to $175,000. Let's say you do that. Well, that's great. You say, but Bruce, I still need $60,000. That didn't help me. I just now have have my loan balances lower. Well, wait a minute, because one thing, when you pay money into the reverse mortgage, more than $600 in interest, you get a 1098 showing that you've paid this money, so you can deduct it. So now you pay $60,000 in interest, you can deduct $60,000 off your income. That covers that tax bill to pull that money out of your IRA. Okay, now you're at net. You're at it's a wash, right? You still need $60,000. But this is the beauty of the reverse mortgage, because every penny that you put into that reverse mortgage becomes available to you in a line of credit. So you can pull that money back out. Now, that's only if you set up the line of credit when you first establish the loan. So you leave $100 in the line of credit, and it has to be an adjustable rate. This cannot be done on a fixed rate reverse mortgage. You take this money out of your IRA, apply it towards the reverse mortgage. You can deduct the interest. Now you've got a $60,000 interest payment that you can deduct off your income taxes. So that's a wash for the taxes that you would have paid to pull that money out of your IRA. Now you've got this $60,000 you can take tax-free from your reverse mortgage. I know it sounds a little quirky. It's all legit, I promise. But think of it this way, that it's a way that you can cover the tax bill because you're paying the taxes or paying the interest on the reverse mortgage. So you get that deduction. That's the big factor with it. But then you can draw that money back out, because the beauty of the reverse mortgage is it works just like a traditional home equity line of credit without a mortgage payment in that respect. And it never comes due. You can do this multiple times. So let's say, I shouldn't say never comes due. That's not correct. It comes due when you permanently leave the home. When the last homeowner permanently leaves the home, that's when the loan comes due. But let's say you do this at age 70. You could do it again at age 80 or 75 or whatever, depending on the amount of interest you've been charged on the reverse mortgage. It's a great way to kind of offset the interest or the taxes that you'd have to be charged if you pulled money out of a traditional IRA or any other taxable account, really. You can use it if you have money in just as an investment account and you have to pull money out. You should definitely talk to your financial advisor about that. Have your financial advisor call me. I'd love to educate them about how reverse mortgages work and this strategy that I think is just a wonderful strategy to use if you haven't already been able to convert your money into a Roth. I think it's a great way to do it. Give me a call with any questions at 303-467-7821. My name is Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage, 303-467-7821, or visit me online at reversemortgageradio.net, reversemortgageradio.net. Now, I guess it's about time. We're pretty frozen. Get out of the water. Get out of the deep end. Hopefully your little floaties kept you going. And get out there and pick up the phone and call me. And I'd love to talk with you about your specific situation. Thanks so much for listening today. Hope you're having a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.